Good morning, everyone. Welcome to another London session class. So copper is rolled into a new contract, but we can pick apart the trade that I had yesterday. Might be a little bit tricky because that was the old contract, so might be an idea to just quickly reference the other chart, because obviously this is now a brand new prices, brand new everything. Let's do this, because I can pick contracts here. All right, so yesterday I ran a couple of shorts, and let me just find it. So yeah, the shorts were somewhere around 53, 54, something like that. So basically I was looking for a drop with the larger time frame analysis, diagnosis. And I got a bit of a drop, then it pulled back. I did close it and then reopen it again for basically the same trade during COMEX. It gave me a different kind of opportunity, but it was literally in and around the same price. Finally got the drop, and that was the end of that. So very, very drama-free. Both of these were taken from the GEX levels, but also weakness from VWAP. So the first trade was supported by, I do believe that I entered right somewhere above the initial balance as it was failing and creating this selling wick. We opened below value, which you can, let me change to the London session only, and then clean up some stuff. So yeah, this was yesterday's London session. I am using, is this yesterday? Here it is. Okay. This was yesterday. Here we go. So London session value low was up at 455.85. Didn't even quite get there. We already had some volume values from a 4 weeks worth, and then it just started to get quite a bit of sellers interested at that area. Eventually failed the auction and then gave us a little drop for the London session, pulled back into the overlap, and then effectively did exactly the same thing. It was a slightly different setup because this was weakness at VWAP with a sustained auction down, and then again a variation to get into the initial balance, but also fail yet again at VWAP. So VWAP was definitely an interesting point for decision making yesterday in copper. And then today we obviously have a new set of levels. So I'm going to go back to Topstep now. We rolled into the May contract, which is HGK now. The London value today for this contract is 57.65. We also have some call resistance areas and a gamma wall right at 58. And interestingly, average session range high for London is also located right around that price point. So that's going to become my area where I want to wait. I'm not going to chase up to that because this is a low probability trade. Chasing up to it rather than trading at your level, those are two different probabilities. This one is more 50-50 because it can start bleeding back down, or it can actually start to rise up in order to get to this point. And I think that is something that newer traders have asked me many times before. It's like, well, what is the difference if you know you're going to get to 458? It's like, I don't know that. Nobody does. So therefore, you need to take this move that we are kind of poking outside of the initial balance as the move that is counter to everything that we're seeing. There could be a chance that we've dropped far enough, because if you look on the daily chart, this drop has now been in force for quite a few days, bar like one failed attempt at a reversal. So 1, 2, 3, 4. Then a failed reversal. 1, 2, 3. And if we take the stats that after the fourth day we might have a pullback, we probably still have yet another day of a drop before it tries to pull back. And then we'll see what happens. But it's coming off, like in general, it's just coming off the top. So that's why I'm not really that keen on going against that until we're somewhere near here. Unless it's like very late in the day and you're doing a settlement fade, that's something that works pretty well on these sort of products. So doesn't maybe work as well on equities. You can get a short squeeze, of course, but that doesn't happen every day, as we've seen last week on the reversal challenge when it just died a death. It's just like massive day and then nothing, nothing, nothing. So yeah, that can happen. But, you know, things like crude oil, things like gold, copper, they all have this like little fade into the settlement, take profit move that happens. So yeah, I want to wait for some of the better levels to come in throughout the day. So I'm just going to say now, I don't know whether I'm going to find a trade for you guys this morning. Therefore, we can make this into more of a class. We are at a GEX2 level at the moment at scam exposure number 2. It is the second in line of the highest interest on gamma levels. So, you know, it is a stronger level. But like I said, it's against the larger time frame picture. So I do not wish to trade from low probability levels because we have a whole bunch of confluence higher up and lower down as well. Malik says, where do I get my GEX levels, GEX values? I get them from Mentor Q. So it's like mentor, but with an H and then Q at the end, Mentor Q. They are a company that has simplified the option chain data pulling. So instead of you having to stare at, you know, matrices and really complicated data that could be a little bit prohibitive time-wise if you're looking at multiple charts, they have APIs and query bots where you can just drag out the levels for the product in question and put them on your charts. You know, they have TradingView, they have MetaTrader, they have NinjaTrader, they have Quanthour and Bookmap indicators that can do that automatically for you. But I'll be honest, I like to put in the levels manually so that I see the change from yesterday. And that kind of gives me an additional idea of what's happening from yesterday end of day or the previous day end of day to the next end of day and how the sentiment has changed. So that's something that is maybe specific to me. But then in my head, it kind of creates yet another puzzle piece that kind of slots nicely into the rest of the bird's eye view, right? So today, we know that the calls were a little bit lower, so now they've gone a little bit higher, but this is a new contract, so that's not, it's a little bit sketchy that when you have a contract change. C4 says the settlement on copper typically end in sell-offs. It will depend what the day was doing, right? So sometimes it ends in sell-offs, sometimes it's pulled by equities, other times it has its own mind. The correlation of what happens into settlement will largely depend on how strong, like let's say you have a very strong trend up. This goes crazy and keeps going and keeps going and keeps going. I wouldn't really expect too much sell-off into settlement on copper because it's a very directional market. Once it makes up its mind, it just keeps going all day, and very few of those monster trending days end up with a meaningful retracement. Like you might get a few ticks here and there into settlement, but you know, it's not going to be the big thing. And you can see that on the daily chart, again, when you diagnose what's happened towards the end. And even though this is a daily candle, volume drops off significantly. Like, for example, if you take this candle, right? So let me just make that a bit bigger. And anytime we deal with big time frames, I like to have a look at the composition of the actual candle. This doesn't really work all that well on low time frames because there's so much noise as it is, but on very large time frames they comprise a lot of information that we can derive. So here you can see that they sort of had a little bit of a wick, but compared to the rest of the day, that's pretty meaningless. And similarly, anytime you have a monster day, here's a drop. Does it really do anything towards the end of the day? Now, like I said, this is a daily candle, but you can pretty much, think that this is somewhere near settlement because it won't move all that much. And literally every time, big day, not much sell-off. Okay, big day. This wasn't such a big day, so if you have a medium-sized day and just so happens to get to settlement, yeah, there could be a higher chance of rally. So those kind of medium strength auctions and limited auctions, they tend to lend themselves better to any kind of settlement fade. Now this goes for RBOB, it goes for crude oil, it goes for gold, it goes for copper, platinum, like anything that is a slightly more alternative market that closes earlier. Maybe not like lean hogs and stuff, because again they're driven by some fundamentals that you're probably better off asking Coach Hoop rather than myself, because I'm not a specialist. I'm actually learning about them, and it's probably going to take me a whole year or two to actually grapple with everything that affects that market, because it's so different from all the others that I've traded. But yeah, so it doesn't have to mean that, massive day and then settlement fade. It's not always like that on monster days. Here's another one. Huge drop. How much of a wick do you have here? Not much. And then the next day, monstrously goes back to the supply. Also not much fade into the end of the day. So just be careful about the day type. Devil is in the detail when you're looking at strength of auctions and deciding exactly what should happen somewhere. The stronger the auction, the more dangerous it is to go against it, in particular on copper and platinum, and to a degree on gold as well, because that can be pretty screamy to one side. So yeah, that's some characteristics of copper that you should put in your diary, in your journal somewhere, and look at it whenever you're trying to trade copper. So yeah. Paul, good to see you. Good morning. Please explain why settlement isn't as the same as close. Yeah, that's a very good question. Is there a time difference also? So this goes back, relates back to the old pit sessions. So back in the day, there were obviously open outcry pits, and they all had their regular trading hours. It kind of carried over into electronic trading as well. So now you have a whole bunch of traders who used to trade there, and it's just considered that the regular trading hours for that particular product still follows the old pit hours. I don't know why. Is it the fact that we still have old pit traders that are just used to working those hours? Is it the fact that the exchanges sort of still have like a soft regular trading hours idea, so it's like everyone's expected to settle those products at the same time? But yeah, so it's because of the pit hours. It effectively still runs on the old pit hours, even though the market stays open. That's a relatively new development, right? Like even up until about, I think like 8-9 years ago, you still had certain products that were not running overnight, like arguably DAX was not running overnight. Like it didn't have an Asia session until, I don't know, about 4 or 5 years ago. And then with the COVID explosion, everybody wanted to trade more. And then they decided that they're going to run it overnight as well. So that's a very new development on DAX. Otherwise, before, it was like Eurex hours. It opens 7 a.m. our time, Paul, and then closes at 4:30, and you wouldn't be able to close and open positions outside of those hours. So literally just like RTH or bust, right? Now, some of the CME products have been opened for electronic trading throughout the alternative sessions as well, like Asia and London. So you can actually trade them during those hours. Should you? I mean, copper, yes, it can move quite a bit during Asia, but things like, let's say Forex and you trade Euro futures, it's pretty dead on most days during Asia and nothing much happens. So if you're trying to find a good trade, you'd be lucky if you get a 10-15 tick move, and that would be considered a big move during Asia. So, you have to match those active trading hours with what the market is actually expected to do. And if you have something that doesn't move that much during RTH anyway, you're effectively going to be really watching paint dry and getting yourself into all sorts of trouble. So that's actually one of my mental triggers, that when I'm expecting something to move a certain amount of ticks and then we run into super quiet day. I'm very aware of that, so I'm telling you this because, this is what it's all about. Being a trader is not like, oh yes, we all make a lot of money, this is all great, and we all trade with a lot of size and it's all peachy. It's not like that. It's literally just constantly almost like censoring yourself and going through the motions of introspection. And it's like, how does this make me feel? You do a trade and you're like, how does this make me feel? Ooh, that riled me up a bit. Okay. So you always have to have those mental triggers in mind. It has to become as natural as a part of your plan. Some people struggle with it more. Other people struggle with it less because some people are more emotional than others. I was never that emotional. I am somebody who is kind of edging the other way, right? So I kind of don't tend to react to things the way people should react in certain situations. And I would say that my emotional responses are probably a little bit dull. And that's purely because of the way my life has been. So, when we were very young, my country went through a civil war. And, my idea of what should elicit a strong emotional reaction is probably quite different than other people's. Other people might get horribly worried about, silly things happening. I'm just like, it's fine, we're alive, sort of thing. So, I don't know whether that's maybe the reason why, because I know that I used to be more emotional as a child, but just over time, life has kind of beaten that out of me. And then I became a trader, and that led to even more emotional awareness and some of the randomness of our thoughts that we tend to have with us in our, inside our heads as an internal critic, internal dialogue. And most of the time it tends to be very negative in the beginning before you deliberately start thinking about your thought processes as something you can control, right? If you just allow your brain to kick up a whole bunch of random things in your head, all of the self-limiting beliefs, everything's going to come up. So for me, for example, I know that I have this thing that stems from me being a child and having an older sister who did everything better than me, because there was a 10-year difference between us. Of course she did everything better than me. But in my little toddler brain back then, I imagined that that she's always going to be better and that I have to compete with her, which is complete nonsense. I adore my sister and we're actually quite similar in many ways. But for some reason, when I was 3 or 4, very young, my parents kept comparing me to my sister, my older sister. So that bred feelings of sense of inadequacy. It's like, I've got to be better. I've got to be better. I've got to be the best at what I do. And unbeknownst to me at the time, that was the drive for everything that I did in my life. So I became this crazily ambitious person who just goes after things and doesn't think twice, head through the wall sort of thing. And my mom was always like, slow down, Deeyana, slow down. Don't do that. It's like, you're like, why are you like that? So you have to know things about yourself, and I know that. So one thing that does irk me is when I think I have a good setup, but it's not moving, my self-limiting belief about myself starts coming up, right? So it's like, maybe I should be looking at it from the other side. Oh no, that didn't work either. Is it a range? Oh no, now I have to wait. these are the things that go through my head when nothing's moving. But these days, after 18 years of doing this, I am very aware of that thought pattern. So when it starts to kind of go into that cycle of, oh, you've lost one, you lost another one, ew, I stop. Now, back when I was younger and when I was a newer trader, I wouldn't stop. I would just keep clicking buttons, right? So that's where the maturity and experience and awareness, self-awareness comes in. All right, Jake wants to know, do you calculate the IB low and IB high from the first hour of the London session? Yes, so 8 a.m. London, which starts approximately 90 minutes before I start these sessions. It starts to like, obviously the London Stock Exchange starts trading. At the end of that, you have the high and the low of that hour. That becomes your IB low and IB high. So let's mark those on the chart. We are popping outside of the initial balance right now, but I did say that longs are not on my radar today purely because of the way the market is, and also the probabilities of how many days we have on average before this thing pulls back. And as you know, I am more in favor of doing swings on copper intraday, obviously, not overnight. So this is the initial balance high at 454.75 and initial balance low at 452.20. Like, technically it should just go on these two candles, but what I don't like is that it kind of covers up the wicks. So I don't know whether I can maybe make it a little less opaque so that we can poke through. On some of the other platforms, you do have an option to put candles on the forefront, whereas this seems to kind of only have the option to draw things on, like the objects go in front, like on the layer in front, and that seems to hide the wicks and stuff. So what I like to do, I like to just extend this so that we can see the wicks, see the wicks, see the wicks, see the wicks. Okay, let's carry on. Fizzled, what do you think about lowering the rebuild cost to encourage keeping accounts alive instead of going Muppet to pass before rebuild? I mean, this is why I say to people, just stick to 50Ks until you've gotten quite a few payouts to justify any higher cost, right? I have warned multiple times, like I even made a YouTube video just not too long ago. Should you copy trade? Like, if you guys watched that video, guys and girls, if you haven't watched it, go to my Mark Stoker D channel and watch it, where I tell people who should be copy trading, who shouldn't be copy trading. And, most people have dollars in their eyes and they spend money before they've actually made money. That's like the common thing in trading. You have one big day, you go, shopping for houses, and you're like, that money, until it's in your account, like actual bank account, and, taxable, it shouldn't be considered yours yet. Because, until it hits your bank account, anything can happen. Trust me, we've all been there before. Those of us who have been around the block as traders. Don't, start planning things out. But, people go, oh, Topstep offers five accounts. Let me get 550Ks, even though I've never received a payout. And I've never gotten to a point where I'm even close to receiving a payout. But no, let's get 5 accounts. Because someday... and it's like, yeah, someday, but right now you've like basically spent what, $1,000 or something on what exactly? It's a lot, it's a big cost, right? So yeah, I would encourage you to keep the cost low until you prove your competence of being able to get a new account, run it up to a certain amount, get maybe $4 or $5 out of it. Then you can justify buying more accounts. So not going Muppet to pass before rebill. But also, if the account is not breached, why would you be going Muppet anyway? So, what's the rush? Is it is it really the $49 to $149 that you have to pay? So I would examine that that stance that you have to pass before a rebuild. They don't, like already, they won't reset your account. So what's the issue over paying for another month? Like, to me, the cost of entry into prop is so low now that even $149 account is not that expensive. Like, we're talking thousands and thousands of dollars to actually get your foot in the door in a prop firm before, because they all used to run these apprenticeship programs, or a lot of them used to, and then you had to go through, some sort of training of the strategy that they were doing before they unleash you onto the live markets, right? And there was a simulated period included in that training as well. But you had to pay like upwards of 5, 10. Some of the apprenticeships were like 25K. And now people are getting all their knickers in a twist over, 149, so expensive. It's like, yeah, I get that the cost of living is higher, but if you can't afford $149 for 2 months, and yet you're getting involved in something that could genuinely change your life, it could genuinely bring you more resources. Isn't that a false economy to not want to spend $150 in order to, or 300 or 900 or $1,000 over a certain amount of time in order to develop the right trading skills? Why not look at it as, going to university so you can get a better job? It's not guaranteed, even that's not guaranteed, but how much does the university cost per year? Like, over here, I know it's come up to like $9,000. When I went to university, it was about 7, 8, but now it's like 9, 10 grand, and then 12, 13, or even more. Like, if you're going to like top tier universities, like, Cambridge and Oxford, that costs like an eye-watering amount a year. That's like, 30. They're not willing to put time, effort, and money. Or even if they are, they're doing it in the wrong order. Instead of time and effort to develop skills, they first throw money at it, as many accounts as possible, as many resets as possible, without actually going through steps 1 and 2, develop skills and make a little bit of cash from the lowest entry cost first. So yeah, I would say don't go Muppet, full Muppet before rebuild, because it shouldn't matter that it's a rebuild. Are you so close to passing? Is that the issue? So you don't want to pay for another month because you are very close to the goal? But even that, like, I never even thought about that back in the day, right? I would just be trading for as long as it takes to trade, and paying a little extra. It's like, it's all part of it. Trading is expensive. Trading is not a cheap game at all. Like, it's cheaper now because of companies such as Topstep, but it never used to. Like, the cost of entry into prop now is the lowest it's ever been. So, yeah. Why is the market all bearish? Even BTC went below 90K, ES below 6K. I don't know, mate. Like, maybe the whole state of the economy, tariffs, it's not exactly great news, is it? There's a lot of uncertainty. We have a new regime in America. We have the Trump presidency. We have a lot of tweets that he's posting, and his speeches are a little bit concerning to the end consumer. Because if tariffs are introduced, that will make everything more expensive for the end user and for the companies as well. All the imported goods are going to have tariffs on them now. And how is that going to reflect on the cost of living? Everything is going to go up. So is that going to then drive inflation up as well, making everything even more expensive? The market environment from a macro picture is not looking that hot right now. So with that in mind, you would expect gold to shoot up, and you would expect equities to go into a correction. Maybe not a bear market like some people are saying, because we're still very range bound on those large time frames. Actually, while I'm waiting for this copper to work out, let's do some analysis on the equities, right? So let's have a look at the benchmark, ES or S&P 500. How does this look from a weekly chart? I wish we had a monthly chart as well. but I don't think they go back that far. Now look, I marked this area as a potential area for a bounce, and it bounced once. Is it going to bounce again? So until that breaks, like literally until we're below, confidently below 5800s, 57.95, I would think that we're still just in a bit of a correction. When this area goes, if it goes, I might consider that it's now a bear trend. But those never last that long, even during the credit crunch when we had a systemic issue with the whole world went under due to the Niger crisis, the no job, no income mortgages that were being given out to everybody and anybody. And then one of the insurance companies that was dealing with all the mortgages and stuff crashed and took the entire market with them. Banks, everything went under. So I don't know whether you people are old enough to remember that, but I was just starting to trade, and it was a very interesting situation where over a 3-month period, the market erased 10 years worth of gains. It was horrendous. So am I expecting something like that? No, but are we due for a bit of a pullback? I mean, Christ, we're up at 6,000, Like, look at this market. Since COVID, it was just like up, 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 and up, right? Like, it's crazy. It's insanity, absolute insanity. This goes back to April and doesn't include COVID smash in March, I can see. But yeah, so it's, I wanted to show you that, but it doesn't go back far enough. Never mind. But yeah, those kind of corrections can be pretty fierce, but from the large time frame, this is still a range, right? So it's not that, oh, why is the market so bearish? We were due for some liquidation moves. This is not healthy. This is not healthy, okay? And if you are somebody who has been making money on the account of everything just going up, up, and up, good for you. Just know that this is not normal. Like, yes, markets go up over time, but there are periods of rally, right? So you get a rally, then you get a bit of a pullback. So you get a rally, then some pullbacks. What we've been seeing over the last 5 years or so literally makes an all-time high, doesn't make too much of a pullback, keeps going up, keeps going up, keeps going up. Tiny bit of pullback, keeps going up, keeps going up. It's like that. To me, actually, that's very boring. That's jarring. I don't like it. I think it's one of those things where it's a very single direction market. And some people might love that. I like a puzzle. I don't like a market that has such a trend that's so obvious that, it seduces you into thinking you're an excellent trader because it's always one direction, right? So people do some super dodgy things like, buying at the tops, and that works out for them. So now they go to crude oil, and they're like, oh, we're going to do the same thing. And they get absolutely destroyed. And that's why you hear a lot of equity traders going, oh, I can't trade crude oil. I don't know what to do with it. And granted, now it's a little bit more difficult, but take RBOB, for example. If you try and long the top, it will nearly always do a liquidity grab and smack you in the face if you try and do that. So, very, very different awareness of what should happen, but unfortunately equities markets have gotten everybody used to, especially people who have been trading in the last 3-4 years, that what do you do with equities? You just buy it intraday anywhere and that will work out. Does that build your skills of diagnosing the chart properly? It doesn't, okay? What it does do is seduce you into thinking you're the be-all and end-all of trading because most of your upside trades have worked out. And you're sitting at 80% accuracy and you're like, yeah, I'm the king. This is what it is. But then, that liquidity runs away and goes away, which will happen someday because, like I said, all of this is, I believe, a knock-on effect of COVID and more people stepping into the market. But there will be a time when there's so many participants that we stabilize the market. The big ranges are going to go away because when I started trading ES, that was after the credit crunch and they locked it up completely, right? So I sat down to see what ranges we have, and it was like average daily range of approximately 5 handles. That's like 20 ticks. And on a lot of the days, it was between 12 and 16 ticks. And I was like, why would people trade this? Like, it's so slow. I didn't get it because I missed the whole craziness. I traded euro dollar before that. And I just didn't get it. I was like, why are there so many ES traders? Like, what is going on here? This is like so odd. It's like watching paint dry, man. And then obviously I did my analysis on it and I realized there was a period when it was moving a lot. And now we were in, at that time, 2013, 2014, there was a quantitative easing program. Everything was being locked down. They didn't want craziness, but everything was trickling upside in a very painful manner, 16 ticks at a time. So yeah, very interesting. So don't get seduced, be very skeptical over things. And if you have immediate success in something that you're new at, we're talking like 6 months to a year, especially 6 months if you're very, very new. I would be very skeptical because that could be beginner's luck. It could be the fact that the trend is very strong. But you see in chat, every time we have a quiet day, everybody complains. I've said this so many times, right? You don't get a big trending day. We get a range-bound day. Everyone's like, the market is shit. What is this price action? I'm dying. I'm quitting. Like all of these like super negative comments that are kind of sarcastic, but also not, because people are super annoyed that they're not getting their super momentum going, right? So, yeah. Therefore, why is the market bearish? It's just macro, right? Fundamentals are not looking that great right now with the potential of tariffs. It's like tariffs are going to make everything a bit of a pain, to be honest. Look at UK. We've got tariffs here. VAT, which I have to do every 3 months for my companies. Okay, let's go. What time does GC open in EST? Oh, great. More time zone conversions. Okay, let's see. So, 8:20 EST. Okay, 8:20. But because most platforms back in the day couldn't quite open at 20, just consider 8:30 as the COMEX open. That's what I do on all my indicators. So 8:30 EST is the GC open time, COMEX. So a full hour before New York Stock Exchange opens. Seaver said, took me 35 days to pass my combine. Kind of frustrating, but why is that frustrating? You're building valuable skills. Like, I don't get this mindset. It's like, right now, we have to do everything now, right now. It's like you're building skill. How are you going to survive in a funded account if you don't survive in a combine for longer than 2 days, right? I am, in my VIP group, I am against people passing anything in less than a month. I can tell you that now. Because it doesn't set you up. Like, I don't know whether Dan Trader is here, is usually here. It literally means, like, here's what happens, right? You have the grasshoppers who pass in 2 days, and then they blow up an XFA in another day. So that's the longevity of that sort of a mindset. But whoever is diligent to consider the combine as a live account, not doing stupid shit in there, not coming in and clicking buttons just for the sake of it. No, diagnosing the chart, using proper analysis, following the maximum default size positions, not maximum full port, but your maximum default size for the account balance that you currently have. Take it seriously. The amount of people that don't take this seriously is staggering. It's like, oh, it's just a combine. I can say that because I have a million live accounts and, I've been doing this for 18 years. It's just a combine. It means nothing for me. And at this point, because I've got a live account, I can't even get a new XFA until I, blow up my live. And it's good to have them in the back. But combines, for me, I can say it doesn't do much, right? But for somebody who's never gone through the loop, never had a payout, never had a funded account, yeah, combines should be bloody important for you. They shouldn't be like, oh, it's just a combine. Like, you can't say that because you're not at that point yet. If you've had an XFA for a year and then they move you to live, yeah, you welcome to the game, right? Welcome to the party or the next level. But until you are somebody who is consistently staying in your XFAs, Combine should be treated as a real account, because this is where you're honing your skills. So this whole thing about, oh, let's just pass Combines very quickly. Oh, yeah. Oh, I just want to get funded. And then what? You get funded. Then what are you going to do? Well, blow it up in a day or 3 or a week? Whoopee! Slow clap. You've survived for a week. Come on, man. You know. So just get your head in the game. Like, I'm just saying this like completely honestly to you guys. You know that I don't, I don't paint some, I'm not going to pat you on the back for passing a Combine in 2 days, okay? I won't. In fact, I'm going to say, okay, just try not to F it up in the XFA. And what happened? In our VIP Combine, most people have taken on board everything that I've said. But no, one dude was being cute. So he's like, oh, I passed in 3 days. I passed in 4 days. The first week. What happened? He lost the XFA the next week. He's out of the VIP. And everybody else who heeded my advice to take it slow, to make sure that they are building valuable skills in that Combine, because they've all lost XFAs doing practices that are frankly not sustainable. So the VIP coaching is all about creating sustainable practices during that period. And then, I even said I want to see stats of how long people stay in Combines versus how long they stay in XFAs. And I know what I'm going to see, right? The shorter the time in the Combine, the shorter the time with the XFA. It's just how it goes. It's only the traders who have been doing it for a very, very long time that, you can pass. Like, I've passed Combines in 2 days as well. It's not a big deal. But if you're trying to build valuable skills that you still don't have, just don't skip over the Combine and staying in there long enough. All right, slowly copper is kind of moving towards my areas, but still no go because we're not there yet. Let's have a look at NQ. I know I was watching at the buzzer last night, so Dolby was also saying that there is a range. He is our range trader. And I know Dolby gets a lot of stick, but he's actually a really good trader, and he's excellent in finding ranges. Like, he's a range specialist. And if you want any sort of help trading range-bound markets, Dolby is your man, right? He's very eloquent, but he's very funny, which kind of brings a little bit of oh yeah, he's not serious because he's always joking. But just have a look at how he's diagnosing the chart next time he's on, right? It's a level. It's 10 years of trading, right? So nobody touched Dolby, right? Otherwise, we're going to have words. But yeah, I was watching him last night with Coach Jay and Coach Paul at the buzzer, and he was saying the same thing. He's like, well, we have a range, and as far as he's concerned, until that range breaks, he's just going to play the range, right? So if you get a weekly test of the lows at 20,686, that would be his cutoff point for make or break sort of thing. So it's the same thing that we saw in ES, and you need to have that bird's eye view. Multi-time frame analysis can provide clues, even though you don't trade from it. It can provide clues over what is happening. Today we're still bleeding a little bit in NQ. Whether that continues into another liquidation day, I don't know. I see the same chart than you do. But as we get closer to the New York Stock Exchange open, that will become a little clearer. So I'm just going to have a look at where we are in relation to the value. Even though it might be a bit too early for that, but still. All right, so right now we're actually sitting below New York value low. And that would give us two things. So yes, short open sentiment, not to short at the open, but it just gives you the sentiment that the overnight inventory was short as well. One thing can happen if we're not too far away from value, which we're not at the moment. is that you get a test of 21,500, let's say. First and foremost, that is the value low for New York. So that would be your first point of interest. Now, if they start bleeding downwards before even touching that, that speaks to a huge bearish sentiment, in which case immediate liquidation quite possibly might be on the cards. For me, it's always a bit tricky getting involved so early, no matter what is going on. But yeah, so below VWAP from overnight, that's also a bearish factor. So again, diagnose the chart from top down and then zoom into your intraday levels to see how you can actually get in on the move. The amount of people that I see just sitting down and clicking buttons, and they go, oh yeah, short from VWAP. It's like, well, why? And they don't know. Well, just because the weakness of VWAP. Then, you need to have that bird's eye view if you're going to have longevity in here, and a contextual nature, rather than constantly being like, oh, what happened if the trade doesn't work out? It's like, what would have been the better choice? Hey, did we have anything on a 4-hour chart that could have been helpful? Things like that. Carlo DG says, I know we can't trade DAX on Topstep yet. Can you do a brief analysis? Yeah, sure. So DAX seems to be not following the rest of the crowd today, which does happen during London. So let's have a look at here. This was my trades that are posted on Twitter. On a different platform, I was on Ninja, but I like to chart it, everything here. I didn't take it all the way at 5, but I did take it somewhere, like I know it was 155 ticks, so wherever that was. But yeah, today, top down approach, weekly chart. Okay, I have my other trades there. Weekly chart consolidation for now. Okay, nothing much to write home about. Big selling yesterday, but unable to take out the low, creating a immediate demand that we bounced from. A bit tricky to call these because they can be drop-based drops as well, especially if we're like turning around. However, today DAX looks more bullish than the rest of the puppies in this asset class. 4-hour chart. Let me increase the volume area to 4 weeks worth, because this is just over 2 days, because I wanted to see a more immediate profile from yesterday. But when we look at the volume profile, what do we have? We have this big sort of point of control area, which is the widest point of the profile. That was the reason why I went into this trade yesterday that I posted on Twitter. I wasn't sure about it because they spent so much time. And if they had started building more volume and could have ever so slightly pushing above it, that would have meant that this would have acted as support, because it's a reaccumulation, right? They stopped reaccumulating, now they're going higher. Right now, we did go into a value acceptance that I can already see here. We have a daily Q point low, which is a swing extreme to bottom quartile. It's my concept to sift out the areas that are not relevant to supply and demand, but rather just located at the edges. So with that in mind, I would probably be looking at longer time frames to come back to the all-time highs. But for today, it seems that it's going to rotate fully through the London value. This has been moving quite a bit during New York times as well, so I'm going to have a look at the New York values as well. But this point of control and this very thick area that we have the supply at as well, I would still consider that a contender for further shorts. Okay, so if we manage to break higher above, specifically above this little high volume node, then we might have a single direction trend day, which should become obvious because you have the ADR high right at 22,613 that would need to be ignored. So sometimes they smash through it, ignore it, then they come back and retest it. So if that happens, that would be an area where I want to be involved. Let's have a look at some options activity converted from ES into DAX. because, you know, SPX has a knock-on effect on everyone. So we did have a put support level from end of day yesterday at 22,470. 22,470, which was here, roughly. So that was put support, but obviously that acted as a further upside move. We are now creating an additional demand area with the proximal line that I like to call a conterminous line at 22,433. Let's see what that does on the intraday time frame. So just going to put another line there. And I'm going to say H4C dem, just to delineate that. So we're going into the 30-minute chart now. And what I'm going to do is I'm going to remove the volume profile and I'm going to put just the New York profile on there. Here it is. So what does that do for the New York session if you're going to trade DAX later on? Well, we have a bit of a confluence with the value high, because when you look at where the value from New York session was, and there was a lot of movement yesterday, there is a confluence between the value high at 22,462 and this put support area. So really, if I'm looking at further longs, here's another area where I want to be watching, right? So that will be my first point of contact for longs. If it goes higher, we build more things as the market generated information keeps printing new information, right? But as it stands right now, let's say that this overnight Globex VWAP eventually tracks throughout the day to be somewhere in the zone. That would be my third confluence, and that would definitely mean looking for longs around 22,470 all the way down to 22,450, right? If that breaks, then we have a liquidation day in DAX as well. But DAX is looking more bullish right now. Now, there could be a chance that we go up to this volume profile thicker area and still reverse. So that would be maybe one hypo. Shorts from about 22,600 all the way down to the value high. And then looking for further longs. This is how you create hypos that sort of blend from one story to the next to the next. It's almost like a series. And then you have episode 1, episode 2, episode 3. That's kind of how I like to look at my hypos. If I have hypos that are disconnected, it usually means that the market is doing something odd and it doesn't really have confluences. But usually on my excellent days, if I have 3 hypos, 3 of them will work out. Sometimes even if I have 4 hypos, all 4 will work out. But usually my 4th hypo is reserved for a less probable sort of breakout type situation that goes against the other 3. But usually you can have a flow. You know how as coders you have the execution flow? Similarly, I look at the market in the same way. So for example, if I am looking for a sustained auction, let's say we broke out, we're in a London sustained auction. So if you can see that, here it is. So we've got into sustained auction. But sustained auction in my methodology has the end point, the target of the average daily range high. If I'm not in on that until we reach the ADR high, that's the stopping point for the setup. So then I can't be going for a breakout because I've reached the end of the setup, right? This was the intended target. It's like, and now what? You never want to be in a situation as a trader to go, and now what? I don't know what to do with this. You need to know what to do with it, right? And this is one of the ways. Have a target, and even if you don't take the full target, right, you can have other targets along the way. Or you can just take it off earlier. You can take it off at the high volume node and be done with it. You don't have to push it all the way, but that is the intended target. So that's what I mean by execution flow. So if we go up here, we react downwards, then it's no longer a sustained auction for me. So I wouldn't be fishing it up here in order to go higher. No, I would look for a return to this next point, which is the New York value high. And that's now a different session with different MGI, still supported by some data that we did in London. So maybe you have a new point of reference, like a London high, that maybe doesn't even get up there. That would be bearish, right? Because that would mean we've made a higher, lower high. So we made a lower high. Is there some sort of a trend? You know, all of that is the stuff that kind of happens in my head automatically at this point. But, you know, it took many years. Like, I remember when I first sat down to create hypos, I was like, it took me like 3 hours to come up with like 2 of them. It was quite a process. But then over time, everything gets easier. You know, one of the reasons why I know all of this and why I can help many people is because I've been there, right? So we get it. Whoever's been trading, we know everything that can plague you. We know how to deal with it because we found a way out. We found the light at the end of the very dark tunnel. And now we're sharing our knowledge. Malik says, your advice saved my ass just now. I was going to full port on NQ, but I gotta chill. Glad to hear that. I'm glad to hear that I'm saving your ass. So yeah, let's keep it up, right? That's a good thing. Din's Revolution says, hey Dee, how long have you been on Topstep Live? And do you only trade London or do you also trade New York? Interesting that you asked that. I actually mainly trade New York. I do not trade Asia very often. I will trade Nikkei purely because I don't have DAX, and I will trade it after some sort of an FOMC. Let's go back to Topstep actually. So I think that's enough DAX analysis for now. Yeah, so I don't trade the Asia session as a whole. I'm not like, oh yeah, Asia session, great. All right, copper has reached the intended area. Let's see what they want to do with it. Let me just change this one as well to copper. So yeah, my main session, like where I was trained and everything, it was always New York, right? But then about 4 or 5 years ago, actually it was during COVID, they suspended crude oil. That was my main market, right? And suddenly Dee was like, well, what the hell do I trade now? And yes, I traded a bit of ES, I traded a bit of NQ, but they're not, like, I don't gel with them as much. It's not something that, you know, that I was super familiar. I don't know how it lives and breathes, even though I've been sort of trading it for a while. But as a whole, you know, I wasn't really considering myself as any sort of an equity trader. But when they suspended crude oil, I was like, well, I have to find something else. And started looking at DAX because, you know, I did work in a London prop firm and there was a lot of DAX Bund traders. Some of them were doing spread trading like Bund Bobble and Shots. Those are like the bonds in Germany. And and then a lot of DAX traders. So I knew that was definitely a possibility. So I started watching it. And literally within 3 months, I was like, I love this. I was like, this is a good market. It was fast enough. It was smooth. And I just fell in love with DAX. So ever since I've been doing DAX, I think in particular over the last 3 years has been pretty intensive. And I usually trade it from 11 a.m. my time, which is coming up in about half an hour. And I typically like to hold my trades for 2 to 3 hours. Now, in the last 3 or 4 months, because we've been moving during New York, I would also find another trade intraday later on. Or if I wasn't able to trade in London because we're kind of trying to move house and stuff, so there's like a lot of stuff that needs to happen. I effectively trade New York, and that's been working out. Last couple of trades that I did have weakness around VWAP. That was yesterday. On my own account, I made $11,600 on that short that was on that chart, and it was only like 3 full DAX, which is kind of like Nikkei, 25 per tick, 25 euros per tick. However, this did convert it into dollars because it's on Ninja, and so that was a very pain-free trade. There was no drama. It didn't wick and wag around crazy. It just got up to VWAP, started bleeding, then smashed down to like 155 ticks. It actually smashed more, but I was happy to take that. So I was like, okay, It's enough. And then I went off to walk my dogs. Like, that was it. Paul H says, another question, look at a weekly chart and volume profile. Do you look for a range to decide how many weeks to include? Do you just look at 4 weeks? So I personally just look at 4 weeks because that usually comprises those 20 trading days that a lot of the indicators are coded around. You know, you have 21 EMA. Why is that? Because you usually have 21 working days, right? It's not, or 5 days a week. It's like crossover between 29 and 5. Why did they pick those two particular numbers? Oh, I don't know, because it's a 5-day week and we've got 21 days in a month. So yeah, things like that. I just like to sort of include 1 month's worth if I'm looking at bigger time frames, and it works really well. So the 4-week POC tends to be better than just looking at the previous day POC, or even just 1 week. Sure, you can go down a rabbit hole, you know, and see which one would work out. But remember, I use TPO profile mainly. So in a way, this is just my way to slightly get a nudge in the right direction. Which of the supplies and demands are more relevant? Which one of them are sitting in higher value nodes? Higher volume nodes, HVNs, and then effectively exclude all of the others as something that might cause a bit of a speed bump but won't cause a real reversal. That's how I like to look at that. So it's kind of like an add-on to what I'm already doing with supply and demand, just with pure price action. A very good question, Paul. Always with amazing questions. Stop Hunter. Good morning, Dee. If the market... God, you're so polite, all of you. You're always like, good morning. How are you, Dee? Thank you. If the market opens with price outside of the initial balance, how often does price return? Okay, so that is a bit of an oxymoron there. You can't open outside of the initial balance because the initial balance is created during the first hour. So how are you going to come out... So are you talking about the value area, not the initial balance? Because if you're talking about the value area, then yes, that can happen. But the initial balance, like I said, that cannot, like you have no initial balance. When the market opens, it starts to create the initial balance. Initial balance doesn't exist until the first hour of trading. Unless you look at the previous day's initial balance, which sometimes has a merit, but it's not something you can do every day, right? However, the value area from the previous day is the distribution curve. Okay, here they are. There's the two lots. Let's see if this holds. Very, very tight risk. Feeler trade. I know I'm in with 2, but it is a feeler trade. If they don't work out, then I still have some ammo to try this again higher up or to change my hypo. But some sellers have appeared. So let's see if we can... 300 risk on this. Yeah, so if you're looking at the previous day value area, that the return to value will depend on a couple of things. How far away are we from value? So you can effectively have 3 situations. You can have the value area that is opening where it's opening just above it, in which case, is there enough juice for you to run the reversion to the value area? Probably not, because it's only going to be a few ticks, right? So that's just step 1. If we are opening within in the vicinity of the value, does it actually have enough space for us to run a mean reversion, or can you just look at the value high, for example, in equities, as a orientation point? Now, mind you, NQ likes to wag through the entire value area in one go, and still reclaims value high, then turns around and goes. So there are certain caveats in regards to the behavior of the market and how they get there. Does that make sense? So that's step 1. If it's too far away from value, the statistics on return to value fade markedly. Like they kind of just go almost to like 0, right? If you're over 1.5% away from the value area, and you can use the measuring tools wherever they are, forecasting and measuring tools. I think price range is what you want to see. Here we go. If you start dragging it around the chart, it starts to tell you how far in percentages you are away, and in ticks as well, but in percentages too. So use those to figure out how far away you are from the value area. If it's too far away, there's like 90% chance it's not going back there. There are certain products with a stronger trend at the time that could mean, let's say you're in equities, we open below value by like 1.5%, and it still goes back to the value low. So it still rotates all the way back, goes into mean reversion, but that's on the account of a strong trend. So there's a directional bias in the statistics connected to the initial balance, connected to the value area return. But overall, if we take all of that into consideration and we don't make a distinction between longs and shorts and distances from value, what is the percentage of the market that goes back to the value area overall? That on some of my products is going to be about 34% of the time. So not taking the distance and not taking the trend into consideration. So there are ways to bump those statistics up, but the core statistics say that the return to value will happen 34% of the time on, let's say, crude oil. But I think ES has very similar statistics. You can use Edgeful for that. Edgeful actually has indicators TPO, time price opportunity. I actually asked Andrew to create that. And you can choose the sessions. You can even change the sessions. And you can even go by day, right? So that is the statistic that I asked Andrew to create. And he's created it, and you can go and look at it. So very, very handy to have a look at what are the probabilities of the setup you're looking for. Can you review the NQ? I did review the NQ earlier, so let's go to see NQ. Big chart. Big chart. In a range on a weekly chart, right? Range. Here's the bottom of the range. Here's the top of the range. So now, are we going to break this area or not? That will be the defining moment of whether we're changing trend or not. Right now, we're not changing trend. On a massive time frame, nothing's changed. Like it's like literally still the same. On the daily chart, obviously looks pretty bearish, but we still see the same thing, right? We still see the range. We still see the reactive demands over here. Here they are. 1, 2 reactions. Third reaction will tell us the story, right? But until we get there, shorts are probably in play. You know, I don't like shorting in the middles. If I'm going to do a swing trade, you know, I want to be up here or down here. So if I was going to run a swing on NQ, this wouldn't be the area. So intraday, you have to still find a better area. Maybe a test of the value low would be a good one. Look for calls and puts intraday. I know that yesterday we had some levels around here somewhere. Yeah, so what happened there? Did I just... Hold on, I just did something stupid there. But yeah, 21,470, let's say 21,500 roughly, is where some of the options activity levels are, and that is also roughly, bizarrely, NASDAQ value low from yesterday's market. So yeah. Jay Hughes says, do I have any advice on where beginners should start to look for less volatile charts that still offer enough tick moves to make them worthwhile? Very good question, Jay. Have a look at something like platinum. Platinum is not volatile. When it trends hard, and it is nowhere near as whippy and wicky on most days than NQ. And in fact, I would say it's never as wicky and whippy as much as some of the equities. So to me, stay away from very volatile products if that's not really working out for you. And look at platinum. I would say even gold is a bit tricky these days. Like those candles are massive, man. Like the candles are 180 ticks wide on a 30-minute time frame. That's insane. All right, let's just go back to this copper because I am looking at it from a larger time frame as well. And for now, we have a bullish candle, which is a hammer. So hammers, to me, have a high rate of failure. So whenever you see that intraday, typically, most times they won't hold. And what does the profile look like on that? Nothing much. So it would be an auction fade if we turn around. So yeah, platinum is one. Let me think of others. I would stay away from crude oil. Crude oil is a bit quiet these days, so I don't like that. I mean, copper is a good one as well. I've got to say, I'm kind of like staring over there, but yeah, copper is a pretty decent product for beginners. I think if you want clarity of what's going on, and a trending market that once it makes up its mind, it just goes. That's probably, have a look at copper, have a look at platinum. They are calm products, right? You have NASDAQ that is a bit of a psycho, right? It's like, looks like it's always on, like, either... I need to remember to keep my mouth a bit less... because my brain just goes to certain analogies that are not exactly PG, so I'm going to try and find a different analogy. It's like NASDAQ had way too much coffee or a few Red Bulls. Of course, I was going to say a line as well, but, again, I'm going to try to keep it PG. So NASDAQ is... constantly just going up and down, up and down, up and down. I'm nervous. Like a dog, like Coach Hoop actually says it nicely in PG, like NASDAQ doing zoomies. I love that. So that's how it is. But if you look at copper, compared to NASDAQ, especially during the regular trading hours, the price action is smooth. Yes, there is intra-candle movement, but it's not moving like as if you're having a seizure, right? It's like, few ticks there, comes down there, makes up its mind on direction, keeps going, or reverses. It's like, it's calm, right? It's like zen of price action. I'm a little bit too old to be looking at NASDAQ every single day, right? I can do it every so often, but even then, like my NASDAQ trades are like super short, right? They're like hit and run. Grab 100 ticks and then run. I would never think of just holding on to a NASDAQ trade for like 3 hours because it would do my head in, man. It was like all of the movement. If I had to sit there and watch it, because you usually have to, especially on the kind of stop losses that we're using. But bizarrely on copper, you don't. Once you get the move in your direction, if it doesn't stop you out, you get a move in your direction, you can chill. You can just go do stuff, come check it. Oh, it's made a move. Okay. How much movement is it? And usually I grab anywhere between 70 to 120 ticks in copper and platinum, right? And I don't trade Asia. I start usually my London trades in and around my 11 o'clock, which is coming up in 15 minutes. So this is a little bit too early for me, but still, we are at the levels. We also can't control when the levels are reached. We're at the levels that I was interested in. And there is a bit of a reaction around the core resistance. So now we also need to get out of the London value for this to be a valid trade. And then I can kick that off in my live as well. And and then probably stay in. If it does reverse and starts to trend back down, I'll probably stay in on this for at least 2 hours, maybe even 5-6 hours. It depends how much traction we get from here. So yeah, have a look at copper and platinum. One thing when you're trading copper and platinum, I don't know how much you watched my London sessions. Do look at the volatility index. It's kind of a VIX for copper and platinum, and you will find that on the CME website. So if you type into Google CVOL So literally type in C vol copper. It's then going to give you CME group volatility indexes. And if you go down, there is this table. You go into metals and you have a look at the volatility index for copper and platinum. Now, platinum, every time it climbs up, I'll tell you exactly when. So there are cutoff points to the volatility indexes that I want to see for good trending moves, right? Without that, you're always going to be watching paint dry. So platinum needs to be over 25. Copper needs to be over 20. So those are the two cutoff points. When this falls below, so let's say copper falls below 20, probably more a range-bound market rather than a trending market. That will be a part of my plan, and that is a part of my plan. In fact, if I show you this, this is something I do on most days, maybe not every day. At this point, most of it I will do it on the chart, but I will do this process if, let's say, I'm in a drawdown or something, and then I try to have all of my puzzle pieces lining up. And one of them is platinum 25. Crude oil needs to be over 35. That's fallen, so this is not true anymore. And then copper needs to be over 20. So use those. So volatility index is the first point of interest, and then after that you're like, okay, let's see if we can find a trend. If it falls under that, wait. Okay. All right, now we're in a 2-minute chart here, slowly popping below the ribbon. Let's see if we can go below the low, and then you have a microstructure shift. Whether it holds below it or not, I do not know. See the same charts as you do. But yeah. Oh, more questions have come in. Okay. Dylan says, where do I learn about the way you trade? TPO volume profile and for Forex, where a lot isn't applicable. So I do have a course. I know people are like, oh my gosh, there's a course. But my course is CPD certified. It is a structured course that we built over 3 years. And because it's CPD certified, it always has to be reviewed every 12 months. So far, there have been 3 revisions of the course because there are questions that I haven't answered in the previous thing. If you want to see that, have a look at the website. It's on my YouTube channel. You can go to my actual YouTube channel, and then all the links will be there. So that's my YouTube. See, I've not used my own YouTube so much that I've forgotten my channel name. Is it still Market Stalkers? I know that I changed the actual name of it, but what is the actual thing? I have no idea. So let's have a look. Yeah, it's still at Market Stalkers. So that is my YouTube. So go there. You have all the links under every single video. Just click under, and you can hear me pouring my soul out to you in the whole channel. I actually have a ton of bloopers from when I was doing the course, because obviously I had a green screen up, and then I also had dogs here, and I was also reading from a script, because it has to be, all scripted so that you're not waffling on too much. One thing I absolutely hate when I sign up for any sort of a course or something is when they just give you 4-hour webinars that are completely unstructured, and then you have to listen to the dude waffling in a monotonous voice for like 4 hours to actually derive any sort of information. And when I set out to do that, when people have been asking me for a course like for 3 years, I promised myself that it's not going to be like that, right? That I'm going to be engaging, that it's going to be only up to 45 minutes to an hour maybe, or shorter than that. And I stuck to that in my whole thing. So it's more like going to a university lecture rather than, oh, it's just a trading video. So we go through the Kolb's experiential learning cycle. So we set the abstract concept or you hear, for example, core resistance and London value giving shorts, right? So that's just a hypothesis that is an abstract concept for you at this point when you first hear it. Then you have to go to the actual live experience. So it's like, does this actually happen? And how does it happen? Because you don't know at this point. I know what this looks like generally, but, obviously I've been staring at these similar setups for at least 13 years in the futures markets, and longer if you take in my Forex swing trading career for 5 years. So I wanted to make a course that is extremely structured and pushes your level of development with each lecture in the right direction. And even NinjaTrader, because we are their vendors, they've reached out to us saying that, obviously one of the guys had an access, and they said that we created something really special. And I was supposed to do webinars with them, but a year ago I was really sick still, so just didn't have too much energy. So once we move house and stuff, there is a chance that I'm definitely gonna do webinars for Ninja as well. So, that is coming, because we're also creating indicators for them. So yeah. But yeah, check the website. That's where everything is. You have tiny little affordable courses that are like only 6-7 lectures, as opposed to like 40-50 lectures. Actually, probably even more if I take in the Live Trader archive. So yeah, there's a lot of hours in there to study the way I trade. So if you're interested in that, go check it out. You don't have to. I'm not forcing anyone with a stick to go and and look at it. But if you're interested, if you're intrigued, you like what you see, the confidence. Usually, during the New York session, you've seen me do my RBOB trades into the end of the day. There's a lot of confidence there, and the reason why is because it's rooted in data. It's rooted in statistics. It's rooted in the study of order flow and auction theory. So yeah. Dee, you've mentioned TPO chart. What exactly is it? Can you show us on the screen and how we can get it? Okay, so Topstep doesn't have TPOs yet. So I'll lead with that. We have been asking for it for over a year now, because as you know, Hogue and I both use TPOs heavily. But what is it? So I'm going to show that on here. So you will notice on my right side of the screen here some letters. Well, that's actually the exact same information as this graphical overlay, because I got sick and tired of waiting for different people to give me the indicators. I tried every single one at that point, and nearly every single one 10 years ago was on a different screen. So literally you had these letters over here undocked, and then you're like, well, now I have to scan for candles, because my way of trading is to combine pure price action with the TPOs and see how all of that matches. So I don't just look at the TPOs. There are people who only look at TPOs. Now I can't kick off that mode. Probably won't be the prettiest because I don't use that all the time. Here we go. So this is the pure TPO mode, right? This is the TPO chart. We can make this a little bit... if I change the tick size and stuff, I can make this actually look prettier. So let me try and do that. Tick is 2 here, so let's try 3. No, maybe try 4 or 5. So let's see. Here we go. So that looks a little bit prettier, right? Now, some people only trade like this, right? They don't see prices, nothing. They literally just see the TPOs going. And for me, I can't do that, right? I came from pure price action, supply and demand type trading. Do I look at all of the levels? Do I follow the auction process? Yes, absolutely. But it is not my primary way of doing things. So we did have this mode we have a mode to only display TPO charts, but I wanted a graphical overlay. So this is why, this is how I do it, right? Now I've changed the tick size here because I wanted to compress the profile a little bit more. So I'm going to go back to default. But yeah, this is how I trade, right? So the TPO charts are the letters that effectively represent a vertical histogram of each 30-minute period, right? So it's the same information that you see here, but organized in a slightly different way. It also is comprised of the regular trading hours value area, which is nothing more than a distribution curve. You know, everything has a distribution curve. So for example, today the distribution curve is sort of at the top part of the profile. You can see the belly is getting created. It's more like a P shape. So is this, you know, every shape of the profile has its own stats attached to it. So it's like, for example, if you open outside of the profile, there's more chance that we either continue the auction or go back into the mean reversion, and you can use the value area edges, outer edges, in order to run your hypos. So it kind of systematizes a lot of the stuff that people don't think about, and also gives you a real-time view of how the auction is doing. So right now, since we built so much structure on the TPO chart, like look at this, 1, 2, 3, 4 TPOs in a row, even it was probably going to be 5 soon. So that tells me this is some kind of a top, but at the same time, because it's P-shape, it could be short covering. So all the people who were short today may have gotten run over. So now they're all bailing, causing the market to rise. So that is something that I combine with average ranges, which are my concept from the regular trading hours. I came up with them out of a need, like everything you see on my chart does exist already, but then I have my own twist, and I've kind of evolved those concepts to serve my purpose further. But that's your TPO chart. Right, so copper has made a move. We have movement. So yeah, they've gone into short from that area. So I'm probably gonna sit on this for a while. You know, I'm gonna still be in the same trade 4 hours from now. If it doesn't come back very soon, there are certain things that I will consider whether to keep or bail. But one thing is that we create another area of structure. So, you know, if we have a new high and a swing over the next 2 hours, then I want to see that stay. And then eventually, if we get down to the London low, I may just take this off, right? But for now, this is an auction fade. And an auction fade for me actually has a stopping point at the initial balance high, which is not too far from GX2 and not too far from overnight VWAP. So that could be a problem. If we manage to battle through those areas and go into a full rotation, then that is a higher time frame taken hold, and there is nothing for me to do. But yeah, this would be my next area of interest here. So let me change color. No background. And let's go into more of an orangey color. So if we manage to battle through that, we have more downside. If not, I'm going to take it wherever it is, grab my 50 ticks, and it's not going to be a fallen swing, but it's still going to be a good trade. So yeah. Okay, so hopefully we'll get TPO charts at some point this year, you know, DAX, TPO charts, range charts. And, you know, we are constantly kind of criticized by people for going, you talk about these concepts and we don't have Topstep. Like, I get it, guys, but it's a new platform, so, you know, some patience. I know we've been waiting for a year, but, you know, it'll come. It'll come. And in the meantime, we will, you know, we'll kind of use a mix of our charting along with Topstep X as an execution platform and do whatever we must, because, you know, we all love Topstep X, right? It's a nice, clean platform. But it still doesn't have all the features. You know, we've never said that it's the be-all and end-all. The biggest, by far biggest thing about Topstep X is the risk management. Like, that doesn't come for free with anything. Like, you can have, like, maybe just, lock yourself out on Ninja as a as a daily loss limit sort of thing, but it doesn't have, trailing drawdown. For that, you have to pay, usually not, not an insignificant amount of cash for a third-party plugin somewhere, and that goes anywhere from like $350 all the way up to like thousands of pounds. So, the fact that Topstep comes with risk features built in, it's a huge USP, right? It's the only platform with that. And that means that some of the things that we wanted, like range bars, like, TPOs, DAX, Eurex, it's taken a bit of a backseat. Are we super happy about it? Probably not. I would love to have my DAX for London, but it is what it is, so we push on. Is it possible to sit in on the VIP classes? No, it is not. For now, it's literally just... it is an exclusive experience, and it is a random draft, and in order to keep it exclusive, we can't make the classes available for everyone, can we? Because then that will devalue the whole experience. And, this is one of the reasons why some of the coaching that we do, yes, we do a lot of stuff for free, and the VIP coaching is for free, but, where does it end? We're not really a charity, so it's like... You can't just open everything, all of the secrets, trade secrets, and every bit and piece that we have used in order to bump people's performances up. You can't just give it away for free, right? Because at some point it becomes intellectual property. Because, I know that I've done something in my private coaching that I don't want out there because I figured it out. It's mine. And if somebody else is going to use the same thing, yeah, I absolutely want to be compensated for it. It's kind of like you writing a piece of code and then just giving it away for free, but it's a disruptive piece of code that can change the world. Wouldn't you want a piece of that? Like, I don't know why in this industry we're all trying to become, give everything for free. It's like we're in the money industry. Like, we love money. Like, why? Clearly, we stay for the intrigue and everything, and we also stay for the cash, right? We're not running a... non-profit organization, for Christ's sakes. And yet people expect you to be some sort of a saint, as if you're like a multi-billionaire. So now you're expected, like, I don't have billions, guys, may have a couple of million, but it's not billions, I can tell you. And, in order for, and I get it that for some people that seems like a lot of cash, but trust me, with the UK taxes and the cost of houses and everything, it's never easy. Like, there's no amount of money that you can't spend as well, okay? Well, maybe if you're Warren Buffett, you might struggle. But even so, you can give it away, right? Then you can give it away. If I ever become a billionaire, guys, I'll give you everything for free. But unfortunately, until such time, we all still have bills to pay, and we're all still... just regular folk, maybe in a slightly better financial situation than most, but we still have problems. We still have taxes, bills, more money, more problems, as the song goes, right? Anyways, let's move on. So no, you can't sit into the VIP classes. Unfortunately, they are exclusive to the VIP members. There will be another draft. So we're probably going to keep this going. And then all of that will culminate in the Topstep Trading League, which is something that Michael Patak is planning probably next year, I suppose. I trade YM. Why does nobody trade YM? I do trade YM. A lot of my coaching clients do trade YM, but not on the Topstep account, because I'm designating my Topstep account just for precious metals and energies markets. However, occasionally I do trade it, and I actually prefer YM over everything else. I cannot show you it because last time I looked, I don't have YM, and I don't know whether that's because I don't pay it on my live, so therefore I don't have it in my combines either. I don't know, okay? But I used to have it. Since the introduction of new rules, I don't have it. So I reckon there's a connection of what I have available based on what I pay for on my live account. I don't know why. Don't ask me. I'm not IT support. So yeah, we can talk about YM. Jack doesn't like it. But I'm going to have to use my other platform because I don't have it on here. So let's go over MYM because that's a micro. And it's the first one that I've dragged. Let's have a look at it from a weekly chart standpoint. There it is. Okay, so bearish engulfing on the weekly chart so far. And a bit of space all the way down to the next area of demand, which is down here. When it comes to any sort of swing extremes, the last significant swing extreme is deemed to be even lower. So this is almost like a reactionary demand. Let's have a look at the daily chart. This looks like a drop base potential drop formation in progress. So we might have some more liquidation. Again, don't take my word for it, but this does look very bearish still. Just poked underneath the previous day's low as well. This will look slightly different because I use GMT as the starting point. Okay, so strong 4-hour demand here. What is the profile doing? Let's increase that to 4 weeks. But overall, very toppy. Same as the rest of the equities. Albeit maybe a little bit more bullish because the others already have like 3 days of a bleed. This one only 1. Okay, so what does the volume profile say? All very thin at this point over the last 4 weeks. So not a lot of volume in this area, which could mean either a quick reversal or a quick drop through. So if it starts to bleed, I really wouldn't expect too many buyers to be able to battle this out. We already have like a triple bottom that is a little bit suspect because we went down. What did the London session do? London session this morning, failing the auction upside, but also very orderly exhausting the average range for London. So here it is. Now, Dow doesn't have any options activity, okay? But Mentor Q do this thing with the correlated products where they create something called blind spots, which you can use instead, okay? But as such, YM just doesn't have any options. So keep that in mind. I can't have gamma exposure when it's like nobody's trading that. We did open below value. Never actually got up to the value low from London, which is a shortened London session. So I cut this calculation off at the point of New York start. So whenever that starts, it stops calculating the London. It's a D-shaped profile with excess. So for now, this is maybe slightly bullish, but because of the D-shaped profile, I am looking at a range-bound potential. Therefore, any shorts would have to go a little bit higher up. So definitely not in the middle, definitely not at VWAP, even though VWAP can be pretty reactive on this product. But I would still wait to see what the New York players want to do with it, because right now this is all very, very range bound. I wouldn't be trading YM for London when it looks like this, because this is no trend, nothing. It's just like, yeah, like soldiers. Up, down, up, down, up, down, up, down. Let's see where the New York value area is. All right. New York value area is sitting at 43,560. And therefore, that would be my first area for any potential shorts. Maybe poke into it and then reverse. That would also speak to the current range-bound nature of London. Yesterday's profile was very evenly distributed, or reasonably evenly distributed, with a failed auction upside. So tried to go higher, failed, and then just rotated all the way through back to the demand area. And that was pretty much your day. That would have been the trade that's very obvious to me. When did that happen? It happened fairly late. That happened in the last... So it failed the auction at 6:30 p.m. my time. That is 12:30 p.m. Central. But the true failed auction 3-bar reversal on a 30-minute chart actually became obvious 2 hours before the close. And then a little bit of wagginess and wickiness, but ultimately it went. So that would have been a very, very obvious failed auction setup for me. Equities like to do late failed auctions, unlike crude oil. Crude oil doesn't. So that's something to keep in mind when trading equities versus crude oil. All right, that is it for today. I'm going to go and sign off and babysit this copper trade and maybe try to get in on this on my live as well. How many people do usually how many combines do people usually blow before passing? I don't know, but I would think it's in the, like, depends how long you've been with Topstep, but it's going to be a high number. Yeah. It's a learning process, but also many people get themselves into a drawdown and then just do a reset, which is a crutch. I wouldn't be doing that. Okay. Anyways, let's continue this discussion tomorrow. So please join me tomorrow. Click like, click subscribe. Also check out my own YouTube Market Stalkers channel, which also has a lot of this stuff that you guys asked me. It's already on there, right? I've been on YouTube for, well, 10 years, probably about 10 years almost. But I didn't really take it seriously up until about a few years ago. And I've kind of put it on the back burner. However, I still have a lot of videos there that I recorded during COVID, right after COVID. And then I got sick. So that was a little bit tricky. So for now, that's kind of on the back burner. I still make an occasional video there, but I'm not super active because you'll find me on TopstepTV on most days here. So yeah, check it out and come hang with me tomorrow. Enjoy the rest of the broadcast. Check out our Discord, where we do have the VIP program, and we also have a whole bunch of channels that you can join. You can also find a lot of coaches there. And if you want to come and join us on air to come and chat, banter, live trade, then fill out the casting form. Fill out the casting form. There it is. That is all from me, guys. I'm Deeyana Angelo, aka Market Stalker D. This has been the London session on Topstep. I will see you again tomorrow. Take care.